Real estate tokenization is an emerging trend representing the convergence of real estate investing and also blockchain technology. And our next group of guests will share everything that you need to know on how to approach this very specific asset class in 2021. So please help me give a warm welcome to our moderator, Kieran Arif of Akru, alongside Jude Rev of Durento, and Mohsin Masud of Akru also, and Michael Flight of Liberty Fund.
Hello. Welcome to the third annual Security Token Summit. Thank you so much, Sherry, for joining home, for having us here today. I am very excited to be interviewing and talking to these experts about everything real estate and tokenization. Let's quickly hop on over for some intros. Let's start with Mohsin.
Hey, my name is Mohsin Masud. I'm the founder and CEO for Akru. Akru is a platform for fractionalized real estate investments, and we truly believe in making the exclusive inclusive and democratizing commercial real estate investments.
Jude.
Hello, my name is Jude Approach. I'm the founder and the CEO of Jointer.io. Jointer is the first of its kind commercial real estate decentralized REIT, and we are focusing on solving the liquidity issue in the commercial real estate industry as an umbrella above all the tokenization. So it's a top player above everybody else.
Very interesting. I want to hear more. But Michael, please go ahead and introduce yourself.
I'm Michael Flight. I'm CEO of Liberty Real Estate Fund, and we are putting together and launching the world's first net lease real estate security token.
Amazing. I'm sure everyone in the audience and the attendees can't wait to hear more. So it's going to be a free-flowing conversation. Nobody wants to hear what I have to say. We want to hear what you all have to say. So I also want to congratulate Mohsin on his launch today, and he was speaking earlier. Akru is the proud sponsor, the title sponsor for this event, and I'm very excited about that. But let's hear, we have our introductions, we've done some, we know what all of you are experts in real estate tokenization. I wanted to bring something up to just start the conversation. And if we can actually, everybody can mute themselves while they're not speaking. That is one thing that we want to make sure so that, great, thank you. So how does tokenized real estate compare to traditional real estate ownership? If we can start with that would be great.
Well, I think the biggest issue, and thank you very much, and also congratulations, Mohsin. You've been working really hard on that, and the commercials and the website look fantastic. So congratulations. But I think the biggest thing is that tokenization unlocks a previously thing that was locked in. You've got like $280 trillion worth of real estate assets, and now it's going to give investors that wouldn't ordinarily be able to invest in this product, the ability to invest in this asset class. And then the other thing is we've been doing private syndications. And so if somebody gets into a private syndication or private partnership with us, they're actually locked up for a number of years. And with security tokens, we believe it gives investors really unparalleled, not only liquidity options, but also other extra options that we can get into later.
Great, awesome. Jude, is there something you'd like to say on that?
Yeah, I mean, I think everybody here and in many places already know my approach. So when it comes to tokenization, I kind of among the few that think that it cannot work, at least not in the way that it's been created so far. And the reason that tokenization cannot work because it's not different than digital paper. That's what it is. It's just digital paper. And you still need to do everything around it. You still need to do fundraising. You still need to comply with Reg D. You still, if you take property under LLC, you still need to be limited to 100 shareholders. you still need to, whoever buying your token from you, your security, still need to be accredited. Most likely, you want to be also sophisticated to understand what he's buying. You still need to hold it for 12 months, right, as a period for Rule 144. So even if all that is not enough, there is the liquidity issue. And the liquidity issue is that if you have a property and you take a loan from the bank, let's say you find a lender, give you 70% loan, right? So the other 30%, let's say you sold it out, some of that, all of that, whatever. The point is whoever going to buy it is not going to sell it thereafter. It's real estate. They're going to hold it for a few years, or at least a few months, right? So appreciation will kick in. So what that means is that the daily trading will not be a Bitcoin daily trading. It will be a few $100, a few $1,000, maybe a few tens of thousands of dollars. There is no exchange in the world that will welcome you in, and you are not crazy enough to go to pay hundreds of thousands of dollars to be listed in order to promote $10,000 or $1,000 or $100 daily trading. So whoever going to buy from you, assuming that you're an honest person and you didn't trick them with so many ways that it's possible to trick them, they're going to be locked forever, even without you locking them. There will be, it's like a, you remember the days of the time sharing? You remember that? Time sharing? That it sounds so good. And then when you're into it, it sounds like a nightmare because you cannot go out. That's pretty much what it is, right? So even if people think that have a token is a magic word, it will be if it will be part of big component, but not standalone. As a standalone, it's going nowhere.
So I'll add to it. Traditional real estate ownership where people, Michael pointed out a few good things. Jude brought up a few important aspects to it as well. But traditionally, when people are buying real estate, they're holding the title for it. And when they're investing in real estate, they're usually investing in LLCs or other corporate structures, or either syndications or funds or REITs or things like that, where they're able to own a portion of it. What tokenization does is it represents the ownership within the economic interest of the asset itself. So as Jude pointed out, the asset in itself would still be owned by a legal entity underlying it. Now, what that underlying entity needs to be may be different for Michael's triple net fund, or maybe a little bit different for Jude's liquidity platform. And just like that, for us, what we use is the concept of a publicly traded LLC. So we actually don't have the limitation of 100 members within that, with the benefits of pass-through taxation. Now, there's a lot of different ways around. A lot of different ways are going around Rule 144. There's plenty of exemptions out there on it. But yes, it is in its infancy stages. But you won't be stuck in there. We're coming up with a product with two federally mandated banks who are providing debt backed by your security tokens. So you buy a security token, you want to cash out, you'd be able to do that based just by getting some leverage on that, even if you don't sell it on the other side. You're right. People when they invest in real estate, they traditionally or currently don't trade it on a day-to-day basis. But you know what? That's what OTC desks were for, and that's how stocks were traded, and that's why they were traded on pink slips for the longest time. And there's still plenty of publicly traded companies that trade on OTC desks that have low trading volumes. So eventually, this will pick up. It is in its infancy stages. That liquidity aspect to it does add a significant amount of premium to the underlying assets. So that will result in faster trading, and that will definitely impact more and more adoption and liquidity within these platforms as well. And so it's not that people are just getting stuck by buying security tokens backed by real estate. Real estate traditionally is an illiquid industry, no doubt about it. But REITs sell, people sell, REITs trade quite frequently, right? So if REITs are similar concept-ish with major drawbacks, in my opinion, but there's high trading volumes on a lot of REITs out there. So
All right, so
why wouldn't security tokens be able to achieve this trading volume?
You're saying exactly the right word. I'm glad that you said that, because you basically, I started by saying that there is an issue, and you start to kind of give us a glimpse of what can be the solution, which is basically what we are doing per se. A jointer is basically decentralized REIT, which means if someone wants to tokenize his property, we do not tokenize anything. There is Polymate, there is Securitized, there is many players out there that doing that such kind of job, right? But when you want to sell those securities, we will be one check, like one LP that picked it up. So we will buy it, right? We'll be the buyer. And it's not even a security because it's joint venture. Only two sides, sponsor and us. There is no group. And then on the other side, we're basically selling to people two type of other asset. One is basically exchanging trading note, which is basically a bond that tied to an underlying index. So whoever invests in that bond get return not based on our portfolio. You get return based on the global REIT index, which is 2x levered. So whatever the global REIT index does, that's what your outcome will be. So it's like you come to my mother and say, you don't understand stock, I understand, but can you invest in S&P 500? And you say, oh, S&P 500 I understand because it's very long term and it's stable and I can predict and there is history. I don't know a specific company, but I know the index, right? So people need simplicity, and investing in something that is backed by index on the NASDAQ, it's simple for them. On the other side of the crypto industry, we have another token that is the only way of payment to buy that bond, which means you cannot buy the bond with Ethereum or Bitcoin or dollar or anything. You have to have that token as a way of payment. Now, what that mean? Imagine that you have a token that worth $1 and you cuckoo want to sell it for half, right? Any sophisticated investor should pick that up and immediately convert it to the bond because it's like to have 50% discount on real estate. So what I'm saying here is that we took the real estate industry, which is a security without liquidity, and we took the crypto industry, which is a liquidity without a security, and we somehow merged them together to support each other in the way that even if the crypto market go down, there is for the first time floor that it cannot really go down because there is a real estate on the other side that those money can be used as a way of payment to pay for those securities. So that's what can cause the stuff to be changed. Now, obviously, to build what we're building takes time. We are late bloomer. We start in 2017. We invest millions of dollars. We only accomplish so long, only one step out of 5. It's like Cardano or Polkadot that take time to crack out, right? But we're expecting next year or by the end of the year that it will be boost, and we right the commercial waste that it's the biggest dinosaur out there. And if people can come along and participate without really holding real estate, without having security, because the crypto industry that we are offering them the token, it's not security, but it's backed by security, so it's kind of a backdoor for security. So they don't need to be accredited, but they're enjoying from having a security anyway, right? And that can open the door. That can allow investors that want to buy property easily to have access to cash. I mean, think about it. You go to the bank, you get 70%, 80%, 60% loan, right? You don't go to your neighbor, collect $100 each. You go to the bank. They collect those dollar by dollar and give it to you. Why you cannot go to another company and get check for the other 30%? Can you imagine if I want to buy a building? Boom. Bank give me 70%. Boom. Jointer give me 30%. That's it. All I need to come is find the right property and to have the right track record to manage that property, because we are not managing properties. We're not in the business to manage properties. We're in the business to solve liquidity. So why not to simplify for the owner to have a property to buy or recap their property? And why not to allow user to buy into that industry even with zero knowledge? They don't need to be locked. They don't need to understand how to run the numbers. They don't need to even understand where the building is. I mean, for God's sake, I have properties around the countries in some states that I've never visited.
No,
so
Jude,
right. So I understand what you're saying, Jude. But the other thing is that security tokens can still, solve a lot of that issue. And we're really not selling like crazy type of liquidity issues. What we're looking at is you can invest in the security token. Yes, there is a lockup. We've just completed a partnership with BlockFi so that if somebody wanted to leverage their token or even deposit their token and make us extra interest off of it, they can do that. But the other thing is there's a whole ecosystem out there, broker dealers, ATSs, and exchanges. And like I said, I agree with you. And I agree with Mohsin that there's not going to be a tremendous amount of liquidity. And the majority of people are going to invest in real estate the way they've always invested in real estate. It's going to be a long-term investment. There's going to be some people that need to have some sort of liquidity so that they're going to have to look at that. So I think that you have an excellent situation for, non-accredited investors, and it sounds like it's a great, solution. And I think there's also other ways to skin the cat with professional real estate investors that are, good sponsors. And I think that security tokens are going to be an excellent way to replace the normal private placement, which is what the rest of the industry is right now.
So I think I misled you by something. As I mentioned, we have two types of token. One is a security, right, for accredited, sophisticated, and qualified purchases only. And one is a token that acts as a way of payment to buy this one. So this one that is a token is open to retail clients. And this one that is a security is a bond, right, with security, which we're going to comply with Reg A+ and take it IPO, so it will be available also through the NASDAQ. So what we built here with this security for accredited investor, it's not just is tokenized basically the entire REIT, it's also intangible asset from IRS point of view. And those that do not understand what that means, it's huge, big, important point. It means that when you're a foreign investor from Gibraltar, British Island, China, wherever you want, and you invest in the United States, you need to pay taxes, like 30%, right? It's been deducted before you get the penny, right? And with our intangible asset, there is no income tax in the United States. You pay only capital gain in your own country, which means if you're a foreign big money, and as you know, most of the money is in Gibraltar, British Island, Cayman. I don't need to tell that secret to anyone, right? So if you're investing over there in traditional REIT, get 10%, pay the Uncle Sam 3, left with 7, versus buying our bond, the ETN, get 20, but been left in your pocket with 20 because there is no capital gain in those countries. So now you took traditional REIT, and as you know, there is no traditional REIT for 1 million, all of them worth billions a zillion, right? So imagine yourself that you can welcome in the central area more money in 20% versus 7. It's like oh my God, it's like 3 times more. So what I'm trying to say here, Michael, is that thing about it, like when Uber took over, everybody thought, oh my God, they're going to take the taxi industry, $20 billion industry, right? No, they extend the industry to 60. Now more people driving with other people's cars than ever before.
Right,
And
I agree with you. I mean, what you're doing is solving a particular issue for particular people, and what me and Mohsin are out there doing is serving other, bases, because there's all kinds of commercial real estate. I mean, I'm investing in net leases, which are, prime, what we like to call bonds wrapped in real estate. And Mohsin, you're doing a lot of apartments, aren't you?
Right. So we're doing all sorts of commercial real estate, but single direct investment. So you're investing in an asset of your choosing. And we're enabling people who could not invest before. So we're not focused on that super wealthy people out of Gibraltar, but we're more focused on increasing women ownership within real estate. Or we're more focused on democratizing it from a perspective where people from all demographics could take benefit of this asset class traditionally not available to everyone. There's maybe I forget the exact number, but there's like less than 4% women ownership of real estate. Why? So that's exactly the problem that we're trying to resolve. We're trying to make it more affordable. We're trying to make it more attainable and achievable for people who are interested in investing in real estate, be it a much smaller amount, and then go ahead and do it. If the bank that goes ahead and raises money and from person by person by person and then gets it to you, that's what happens in crowdfunding as well. Why not do it from a perspective where you have liquidity, where you have that secondary market? Why not have it in an investment class where it is achievable? And Michael, you brought up a little while back that, there's plenty of broker dealers, there's plenty of ATS out there. You're absolutely right. All of those functionaries and facilities are there. Our core belief is that if everything is available from a single dashboard, that enables a lot more transactions than having to jump from one dashboard to the next or from one platform to the second to the third just in order to attain some of those liquidity hassles. And that's exactly what we're building. And that's exactly what we've built. So yes, there are certain initial hold periods, But and yes, that there are securities laws that we have to work with. That's our belief. We want to be 100% compliant, and that's what we are. We want to offer these securities. We want to offer these real estate-backed securities for people who traditionally have not been able to get exposure to this space, and then do it through tokenization. Now, people brought up, oh, it's only open to accredited investors. There's more than 12.5 million households of accredited investors in the United States. More than 40% of them are between the age of 35 and 55. We're not your average dot-com boom or beneficiary or something on those lines. These are people working within corporate America who want the exposure, who don't have the time or the ability or the patience to deal with individual real estate investments directly.
Or wasn't you said the right stuff?
Well, and the other really cool thing that I just want to bring up in what we're trying to do is provide extra optionality for our investors. So it's not only that liquidity part, but the other thing is you can invest in dollars and then take your money out in a stable coin, and then your money is on the rails to the crypto financial world, so that you're outside the banking system. So there's just so many things. And like I said, you could do, like Mohsin said, that you can go and get, leverage your token. So you've got an asset that you can leverage again. And like I said, the big thing that I'm really excited about is the BlockFi partnership. I mean, and if we do a few other of those, it's just going to be really, really incredible. Because it gives investors the option to do the things that they can't do with private real estate. So what we're trying to solve for is private real estate.
So what I'm trying to kind of highlight here, and it's very important because people come here to learn, and some of them want to invest, some of them want to learn for different reasons. This area, it's a very complex area with very high risk for the end user. And all the time when people talk with me about tokenization, beside all the regulation that obviously, Mohsin, you cannot buy property, you cannot sell a property before you buy it, because otherwise you're a broker dealer. And then if you first buy it and then sell it, it's not scalable because you first need to buy so many and then sell. So at the time that you will scale, everybody will pass you from the right and the left. So it's not scalable. And what I'm trying to say more than that, every time we talk about tokenization, I remind to myself a story that I came across with a guy called George C. Parker. I'm pretty much sure that you don't know who this guy is, right? George C. Parker. I will tell you who is this guy, and maybe that will help us to understand how serious we take in that tokenization business. George C. Parker is the most famous comment person in United States history. He is the guy that used to sell the Brooklyn Bridge, right, in New York, twice a week, over 30 years, claiming that he owned it, and people used to buy it. And then because they thought that they bought the bridge, right? And back then there was no SEC, there was no internet, there was no nothing. And what I'm afraid of, every time we're building something, we want to democratize that, but also we want to protect people like my mother. Why? Because she's not sophisticated. She doesn't know how to run the number. I know sophisticated people in the real estate, and even they don't know how to run the numbers, right?
Right, but
so
what we're doing is we're trying to work with security tokens, so we don't have that issue.
We need to protect the simple person that doesn't know how to do what to do. And like Mohsin say, and I connected to his word, people are busy to survive. Now it's the COVID, they're even busy more, but they are generally busy to survive. They want the money to work for them, but they don't have themselves how to make the money to work, right? So that's why stuff needs to be stupid, so even a child can play.
Yeah. Fair enough. Even a child should be able to play. I think I said this earlier, like we granny tested our platform. We got my grandma to sign up and buy one of those security tokens. That's how simplified we made it, right? Now, I want to point this thing out, Jude. The difference between what you're saying and what me and Michael are doing is both me and Michael are real estate professionals who are making the most of the technology. Michael is historically a real estate investor, a triple net real estate investor. I'm historically a multifamily and mixed-use investor. Both of us bring enough of our that we don't have to worry about bringing other people's assets before we reach that critical mass or we reach those levels. We're able to commit hundreds of millions of dollars worth of assets on the platform.
And Jointer is the biggest group commercial real estate in the world with SEC underwriters and professional people And we have a portfolio and access to assets almost like the top tier in the world. I mean, for God's sake, I mean, we're all professional here. I mean, one of our advisors is the previous chairman of the SEC.
I'm going to argue there. I think Naveen and some of the like BlackRock are pretty big investors too.
It's important what you do. And if
I'm loving the energy in this room.
I will want to buy them, you know, that's my point. I will want to buy them as a jointer, right? But I will want to let Joe Schmo to hold something that he doesn't understand, because it's for sophisticated people. It's complex. It's like everybody will go to the stock market. No, not everybody go to the stock market, even if it's open to everybody. People do not.
Jude, I just want to say, do you think most investors in the stock market, or even somebody investing in a mutual fund, understands what they're investing in?
No.
So no, first thought, what I think is that there is a people that acting in two ways. Either they're going to spread and pray, like put their portfolio a little bit here, a little bit there. Some of them even put on Bitcoin before they know what is Bitcoin is, just because it's diversification asset class. And there is those that want to really leverage the $100,000 that they really have, and this is the entire world. They are not family offices with a lot of money. They will need to be very careful with the little sense that they have over the years, and they don't want to spread and pray.
Right, and I want to also point out, Jude, that a lot of people invest with securities brokers and RIAs and other people, and they depend on them. And RIAs and securities brokers typically aren't getting them exposed to private real estate. And security tokens are going to get a whole new class of investor.
You're absolutely right.
Yeah.
You're absolutely right.
That's where our new product is focused on as well.
I agree with you. Everything that you say is right. People used to do for decades, centuries, what you say. The question, are they going to do it in the next century, in the next decade?
I love you like a brother, Jude.
Where it's going? Not where it was, we know. Where it's going?
This is blockchain and booze all over again between the three of us.
I love that. I think I need to join the blockchain and booze section.
And Karen, you speak a lot during this conversation, so I don't think
I did. You guys really needed a moderator here. I'm sorry I'm interrupting, but we definitely need to wrap this up. I would request again, let's quickly mute ourselves, everybody who's not speaking, just so that all the attendees can hear us. But this was an amazing conversation. I think everyone who was attending probably learned a ton about both the pros and cons and things that can go wrong, but things that are going right. I'm sorry for taking one extra minute, but if in a few words, we can just end on a happier note and talk about how investors and owners can benefit from tokenization. Just one or two words from each one, and I'm going to say the name. So Jude, go ahead.
Absolutely. So our approach to existing owner or those that want to become an owner, what we offer them, instead of contribute 10% skin in the game, they contribute only 1% of the property asset. And instead of have 25% carry or promote, which is what's the standard industry is, we offer them 50-50. So we give existing owner 4x more than the existing market. So when they have a property for sale, I don't think they're going someplace else because they want to leverage the money as the best as they can. So that's perfect. What is.
I have someone who's babysitting me right now. So we got to move on. But Jude, that was perfect. Michael, what would you say? 2 words, please.
Well, I can't do it in 2 words, but it's bringing investors options that they never had before in private real estate. And it's bringing private real estate owners access to an entirely new capital pool that's just out there waiting and hungry and starved for yield.
Awesome. Mohsin, go next. You are muted, Mohsin, so please unmute yourself.
Akru booth. It's in the expo section. Go check it out. I'm just going to say that. But no, go check it out. Sign up. Check out the details of Akru. You'll find out all the reasons why it makes sense for asset owners and investors, everything that was talked about today. I really appreciate the time. We've enjoyed this a lot. I know I have. And Jude, I love you like a brother. Michael, same thing. I know this conversation got a little heated.
Thank you so much. This was an amazing panel. We love this energy in this room. I'm sure everyone else did because I truly enjoyed it. Thanks, Draper, Gore, and Home for keeping us and allowing us this opportunity. Okay, we're out of here. Thank you so much. Bye, guys.